So good morning, and let's just start by seeing if there's any questions that are still needing to be answered from chapter one. Is there anything that you had any confusion in the reading or?
You said to keep an eye out for theory of constraints, but
Yes.
I didn't see anything in there in chapter 1.
Really?
Yeah, I Googled it, but yeah.
Oh, okay. Well, never mind then.
Okay.
Sorry. I've been teaching this class for like 20 years, and I've got notes that come from eons of teaching it. Okay. So what did you get when you Googled it?
It was basically the introduction, but with focusing on the bottleneck
Mm-hmm.
of a company.
So like what's an example of a bottleneck?
Well, when I think of bottleneck, because we used that at Taco Bell when I was working there, it was when we have a certain area in the store that was struggling.
Right.
Whether it was drive-through window or order taking.
Right. And the whole organization.
Everything will at that spot.
Right. So like one of the things that we're having to struggle with here at bottlenecks is number of classes that are offered. So we're trying to get you guys, through 16 to 18 credits a semester and out the door and into the workforce. The bottleneck is with budget cuts, we don't have, this isn't an issue, but try getting into a writing 101 class, right? So that's a huge bottleneck for us. And, we've got to work to resolve that. One of the ways we're working to do that, so when you're managing an organization, the point of identifying in the theory of constraints, the point of identifying your bottleneck is, now what do we do about it? So we're trying to open more online classes and be less reliant on bricks and mortar. So that's one of our strategies to take care of that. So enough said about that. Okay, what I really want to focus on today, so chapter 1 was basically just that broad overview of the difference between managerial and financial accounting, how you become a managerial accountant, and some of the theories around it. Today we're really going to dig into cost concepts, and these are going to be issues that we're going to rely on to make decisions and as a basis for a lot of our computations for the rest of the class. So let me just start out first. Actually, I should have brought up the smartboard. But asking you to identify some different costs you think that may occur between a merchandising and a manufacturing organization. So, and just to give you kind of a heads up, in financial accounting, whether you took 201 over our main campus or 101, 102 here, we were primarily dealing with merchandising companies, right? We bought inventory, we marked it up, and we resold it.
I can say one expense would be inventory management for manufacturing companies, because it's a whole different thing than merchandising.
Yeah, so here we've got, right, our inventory is purchased, right? We call it cost of goods sold, right? That's how it showed up on our profit and loss. And I'll use the terms P&L and income statement interchangeably. In manufacturing, we don't purchase our inventory. What do? We make it. So what kinds of costs do we have? Yeah, we've got raw materials. And we're actually going to find, as we get on down the road, I'm kind of giving you a broad swath here, that there's two kinds of raw materials. There's direct materials, and there's indirect materials. And we'll talk about the difference between those in a minute, but just to kind of give you a broad brush here. So, okay, so we get in all these raw materials. And the example I'm going to be working with today is I produce wind turbines. That's what I manufacture. And so I get in the nose cones and the nascents and the big propellers. I get in all the mechanical systems. I get in the tower. Then what do I have to do?
Put it together.
I have to put it together, right? So obviously, what do you need for that?
Labor.
So you need labor. And again, within that broad brush stroke of labor, you're going to have direct labor. We'll flesh that out in a little bit. So I've got all my raw materials. I've got my workforce assembled. Is that the sum total of the costs? Hi.
Hi.
Is that the sum total of the costs that I'm going to incur in order to produce these wind turbines? I'm sorry, a little louder, please. You're gonna need the equipment to put it together. What else?
The people.
That's here.
Just the cost of keeping, the building running.
Yeah, I've gotta keep my building running, right? What else?
Rent,
I need the equipment, I need to keep my building running.
rent,
Yeah, part of that probably is either rent or some sort of mortgage payment on my building.
Shipping.
I'm gonna need to ship my products. Now let's think about that. Is that a manufacturing cost per se? Or is it possible to have non-manufacturing costs in a manufacturing environment? Okay, good point. Let's see if we can flesh this out a little bit. So these costs you're collectively talking about are overhead, right? And I'm going to refer to that either as MOH or FOH, manufacturing overhead or factory overhead. These costs collectively are the manufacturing costs in a manufacturing environment. But somebody was kind of tripping around the corners of the fact that there's also non-manufacturing costs, right? Like the facilities costs that house my sales staff, all my administrative staff. So that's a cost. It's not a manufacturing cost per se, but it's a necessary cost in running a manufacturing organization, yeah? Okay. Somebody said shipping costs? Is that a manufacturing or a non-manufacturing cost?
wouldn't it depend on whether it's shipping, like, to the consumer, or if that's the shipping cost that we have to pay for?
Really good point, Sammy. So, sorry, go ahead, John.
FOB shipping order, right?
Yep. So, free on board. All I want to do is go back up here. There we go. So, really good point, both of you. If you're bringing materials, raw materials in, this is all costs to purchase those raw materials and get them into your material storehouse. So shipping, bringing in would be in here. So all inclusive, right? But shipping out, product going out, that's a non-manufacturing cost. How about selling and marketing costs? Right? So these are all just simple examples of non-manufacturing costs in a manufacturing environment. Okay, that's just a broad overview. Let's go to the PowerPoint and take a little bit of a look. I think we start here. Yeah. So again, they're kind of giving the broad overview. They're talking about making some sort of race car here, direct materials, direct labor, and manufacturing overhead. Now, this is where it gets a little tricky. Before, remember I had said there's two types of materials, direct and indirect? Indirect materials are an element of manufacturing overhead. The difference is, and let's go back to the wind turbines, direct materials are items that are directly traceable to each individual unit. So for a wind turbine, what would be easily traceable to it?
Material that it's made out of.
Such as? Okay, so what about the little tiny nuts and bolts? What about the powder coating? What about the bearings, ball bearings that go into it? Are you going to trace those individually to each tower?
Yeah, I would think so.
So it depends upon how economically feasible it is to do that. So obviously, like each turbine has a nose cone. That's directly traceable. I have no idea, I'm totally making this up, but say there's 2,500 ball bearings in each tower. Are you going to maybe be directly trying to cost those out? So that's an indirect material. In a car, obviously like an engine or a transmission or the tires are directly traceable. Maybe the paint isn't. Maybe every little screw or hinge isn't. Okay, so those are indirect materials. They're a component of manufacturing overhead. They've got to somehow be captured in the cost of the car, but they're not easy to directly trace. So we put that in this big category called indirect materials, and it's an element of manufacturing overhead. Same differentiation between direct labor and indirect labor. Direct labor are the guys and gals that are on the floor running the robotics line or actually manually assembling, shifting, compiling, moving, quality checking, those sorts of things. Not quality checking, don't write that down. Direct assembly, directly converting raw materials to finished product. That's a direct labor. The supervisor, the person that calibrates and maintains the machines, the quality control specialist, they're all necessary laborers, but they're not directly traceable, are they? They're indirect labor, and that's an element of manufacturing overhead as well. We're going to talk about this a bunch more. Oops. Raw materials. Direct materials are raw materials that become an integral part of the product. They can be conveniently, easily, and justifiably traced to the final product. In other words, you probably could actually trace every single one of the tiny ball bearings to your finished wind turbine, but is the cost benefit of doing that worth it, right? So that's always the question. Is the information gleaned from it beneficial? So in here they give the example of radio installed in an automobile. You can tell this book's like 5 years old. It's not so much radios anymore as, USB ports for your digitized music, but whatever. Okay. Labor costs, again, same thing, just kind of reiterating what I've already said. Those are the labor costs attributable to men and women that directly convert raw materials to finished products. But you need a whole cadre of other people, don't you, in your factory? Manufacturing overhead is this giant pool of costs that are required to keep your factory running, but are not easily traceable to the finished product, such as indirect materials and indirect labor. Like I said, examples of indirect materials, the lubricants and cleaning supplies, the very small pieces that go into the car that aren't economically feasible to trace. For indirect labor, your janitors, your security guards, your maintenance workers, your superintendents, your quality control specialists. Those are all indirect laborers. So you got that whole pool of manufacturing costs. Those are our 3 types. Everything fits into that. Direct material, direct labors, or manufacturing overhead. And you've got this whole other pool of costs called non-manufacturing. And we kind of looked at that before, right? My selling costs. This is the cost of my sales staff, their vehicles, their travel, their commissions, their, everything it costs to keep my sales staff going. It's my marketing staff, it's my HR staff, it's my accounting staff, it's my general admin staff, it's my iTech. All those costs to keep my business going, but they're not directly allocable to the factory, are they? What if I've got a big building, and part of it's a factory and part of it's admin staff, and I get my property tax bill for the year? How are you going to divvy that up between manufacturing and non-manufacturing.
Would you allocate it by like square footage maybe?
That's probably exactly what you would do. Number of employees, square footage, something that's pretty easy and verifiable, right? So a lot of costs are now going to be allocated between non-manufacturing and manufacturing. Why is that important? Anybody starting to get a glimmer of why that's going to be pretty critical?
Because you want to know what portions of your business are making money and which ones aren't, basically.
Well, most of these are not, well, that's not true. A lot of non-manufacturing costs are not profit centers. You don't generate a profit by having HR, do you? That's mandatory for compliance and good hiring practices, recruiting, retaining, that kind of thing. So, do you want to know how much each wind turbine costs you to manufacture? Why?
That way you can see how much you're gonna make.
Yeah, how are you going to price it if you don't know how much it costs, right? Now, think a step further. So, where is that wind turbine going to end up on your financial statements first? Before you've sold it, sorry?
Inventory.
Yeah, it's going to end up in inventory, which is an account that shows up where? It's a balance sheet account. Stick with me here. So you're not used to seeing costs captured on the balance sheet, are you? Normally I say, I run payroll. Where does that wage expense show up? Yeah, it shows up on your P&L and salaries expense. I've got to pay my rent on my warehouse. Where does that show up? Rent expense on your P&L, right? I get my Northwest Power bill. Where does that show up?
P&L.
Utilities expense, P&L, right? Over and over and over we can have this conversation. All of a sudden now I'm telling you, or suggesting to you to think about the fact that these guys, how many cute pictures can you have, are not going to be captured on your P&L. They're going to be captured on your balance sheet as inventory. They're an asset. And that's a very new concept for you, that costs are being captured as an asset. You've only seen that concept before when you've done what? Anybody come up with this? What's a current asset? It's actually a cost, but it's captured as a current asset from Accounting 101. What about when I prepay my rent or I prepay my insurance? It's a current asset, isn't it? It's a cost, but it's an asset because I'm not what?
Not paying.
It's not so that I'm not paying it. I write out a check for $2,400. When my kids were at home, my insurance was like that every 6 months. It was insane.
Because you're still owed a service, basically.
They owe me a service. I'm not using that $2,400 in the insurance in 1 month. I'm using it over 6 months or 12 months, right? That, I think, is the only other time you've seen a cost captured as an asset. Okay, let me just stop here and see, because this is kind of a lot. Does anybody want to clarify anything or have any questions? And I'll just throw out there, for the sake of this is where we're going, there's more than one inventory accounting in a manufacturing environment.
So is the direct labor counted as, the direct labor costs are also counted as inventory?
Yep.
Okay.
Not all of them. Well, no, I'm sorry. Yeah, direct labor costs are all going to be inventoriable. The cost of Jess being my chief sales executive and Kate being my marketing assistant, those aren't going to be captured in inventory. Those are still going straight where? To the P&L. Those are still going straight to the profit and loss. No difference there. No difference there.
How is that direct labor calculated?
So you guys all work for me, and the three of you work in my factory. Actually, the other day I was in this coolest little factory that I did not know existed. I got lost on my bike over by Bayern. Okay, might have had something to do with the 2 beers I drank, but nonetheless, I ended up in this funky little back alley, and there's a bunch of guys sitting around after work, and in front of a yurt. I'm like, oh my God. I love yurts. And they're like, hi, do you want to see the yurt? And I'm like, absolutely. So there's a yurt factory in Missoula. Who knew that? Yeah. And I mean, hell yeah, what a great retirement gig. I mean, you can get like, anyways, I'm kind of going off here, but it is salient because it's a manufacturing environment in Missoula and we don't have a ton of those. You can get 400 square feet of livable space, beautiful livable space for $13,000. I mean, you got to put it somewhere and you got to build a deck to put it on, but it takes like a day to set up. You got to throw a stove in there, obviously, so it's not the end of the story isn't 13,000. But the point being, it's not 130,000 or 330,000, which is what most things seem to cost around here. Anywho, so this company has been here for 9 years, which just blew my mind. There's 9 folks, they all co-own it together, and 3 of the guys actually manufacture the yurts. They craft. It's a Mongolian style building, and they craft that. They look like teepee poles. They craft the poles. They cut the wire that helps to the tension helps to build the walls. They cut the canvas. They actually manufacture it. Okay. So and then there's 2 guys that sell it, and 2 guys that go out and install, and then there's the dude that founded it. So when they run payroll, every single one of their time cards, that pay goes somewhere. And that's a really great question. I love the yurt example. Okay, so let's say that my payroll at Shelter Yurts is $8,500 for the month. And so a third of that, probably more than a third, are the guys that actually assemble, construct, do the carpentry, etc. And so what does that leave me? 4,600 are the guys that sell and install, and manage the business. So when I run my payroll, in the old days, if this was just a regular old company that didn't manufacture anything, what would I debit that $8,500 to? Yeah, salary expense, payroll expense, wage expense, whatever, right? And credit all of my withholdings and then credit cash, right? Now, the debits are going to be twofold. And we're kind of getting ahead of ourselves here, but you asked the question, and so let's talk about it. Now I'm going to debit how much is going to go to salary expense? The $4,600. Clearly, that's still a period cost or a non-manufacturing cost. This is getting ahead of ourselves, but this $3,900 is going to go to what kind of account?
Inventory.
It's going to go to some sort of inventory. And the name of the inventory is work in process. And it is a balance sheet account. So all of a sudden we run payroll, and instead of it being nice and sweet and easy and just flying through the P&L like it always has, no. It's getting allocated. All right.
At any point, then you print up your balance sheet, but wouldn't that, what periods of payroll expense would your balance sheet work in progress account show? Would it show up
Whenever you
this
ran
year,
it?
or
Yeah.
or is it just like this month? Like, when does that roll over?
Okay, good question. What happens to P&L accounts we're doing a little review here, which is great. What happens to P&L accounts at the end of the month if you close your books every month?
They get reverted into retained earnings.
Yeah, they get closed into net income, which ends up in retained earnings or owner's equity, right? Yeah. What happens to balance sheet accounts at the end of each month? Nothing. Whatever's sitting there at the end of February, sitting there at the beginning of March, right? We know that. Okay, we are getting a little ahead of ourselves, and I don't want to get too far with that. What was that? 8, 9. Okay. So basically, this is kind of what you're asking about. So we know this, right? Now, and again, so they're using terms interchangeably. Manufacturing versus non-manufacturing. Product versus period. Those are interchangeable terms. Product costs are my manufacturing costs, aren't they? And period costs, i.e. they belong to a period, they're not inventoriable as a product. Period costs are non-manufacturing. So those are interchangeable. Sure. Yeah. Yeah. And please, you guys, because this is really like a dump of information these first 2 days in Chapter 2, and they set the basis for the entire rest of the semester. So stop me, tell me to slow down, clarify. I assume you're Sarah.
I am.
Yeah. Okay. So product costs are the same, and you can see because it's direct materials, direct labor, and manufacturing. We saw that on a prior screen identified as what? Manufacturing costs. So those are my product costs and my manufacturing costs are interchangeable terms, and those costs end up on which financial statement? The balance sheet. And it says that right here. These costs are going to get debited in, and they're just right now still using this general T account called inventory, but I just showed you on the smart board that what specifically is it called? Yeah, it's an inventory account called work in progress. And of course it has a debit balance. And the reason I made 3 X's is there's going to be direct materials, direct labor, and manufacturing overhead. And those are all going to get crunched together, and that's going to be the cost of the product that is in process. When it is finished, again, we're getting a little ahead of ourselves, but in a good way. When everything's happened to that batch of, to that yurt or that wind turbine or that race car, it moves from one inventory account called WIP to another one called finished goods. So there's another little T account in here called finished goods. Also an inventory account, that's an arrow. And now it comes over just as one number because it's all been crunched together. Direct materials, direct labor, manufacturing overheads, all been crunched together. Comes over to finished goods as one number. When you sell the yurt or you sell the batch of 20 wind turbines to a wind farm, what happens then? Does it stay on your balance sheet? No, then it becomes what? Yeah, what's it called? Yeah. Then it moves off your balance sheet and onto your P&L. In the old environment in Accounting 101 and 102 when we were doing merchandising companies, we just had one big generic account called inventory, right? And we bought stuff, and we marked it up, and we moved it, and we sold it, and we moved it from inventory to COGS, right? Now we're making the stuff, so we've got this intermediary process.
So,
Go ahead.
When you have the work in progress, you have all 3, you'll debit into there, and then you put them into one.
It's going to be one number then.
Okay.
You know, like the raw materials, like the other thing that was really cool is everything is local. The wood's local. The UV protected, it's like a canvas, like a TV canvas, is manufactured in Billings. It's all local stuff. So all those, so it's maybe not going to be like 3 debits. There might be 30 debits here. You know, I get in the casing. I get in there's like a solar powered round hole in the middle. It's very teepee-ish, but in a more of a domed look. Do you guys know what a yurt is? Yeah. You know, so there might be 30 debits in there, 50 debits in there because my raw materials are applied, you know, at different times. right? But when everything's in there and I've applied my overhead, then I've got one number. You know, those 2 yurts were $12,000. He said right now he's building 2 that he's sending up to the Arctic Circle. It's got to withstand 240 psi, or pounds per square inch, of snow weight. Okay, these guys, same as always. Debit expense, credit cash. That's what we were talking about earlier, right? So rent on my factory, overhead. Rent on my building for my sales staff is what? Rent expense. I get my Northwest Energy bill, and a third of it's for my factory, a third of it is for my marketing staff's building, and a third of it houses my HR and accounting departments and my CEO. What do I do with my Northwest Energy bill? Go ahead. Yeah, exactly. 1/3 of it's overhead, and 2/3 of it goes straight to the income statement. You don't quite know how the whole process works around overhead yet, but you know it's going to end up where? Right? In WIP. It's inventoriable. All of our manufacturing costs are inventoriable. All of our non-manufacturing costs, or period costs, which are interchangeable terms, same, straight to the P&L. This isn't so important, but just this is just really accounting terminology. We call our direct materials and our direct labor prime costs. And the direct labor and the manufacturing overhead we call conversion costs, because that's what we have to do to convert direct materials to work in process. So that's just a terminology thing. Okay. Now, really basically, what time do we have? I can't see while I'm...
10:33.
Great. Classifications of costs. Okay. All right. So basically what this chapter is about is, I'm just, like I said, this is just kind of an information dump of how we categorize costs. And the reason we're doing all this is why? Why all of a sudden is it so important to slice and dice these costs?
So that we can project things.
Okay, good. It is so we can project things, absolutely.
So you can get a better hold on each sector.
Yeah, it's all about segmentation. I mean, what if I'm making yurts and wind turbines? It's pretty important to me to know how much goes to each wind turbine and how much goes to each yurt, because how else am I going to price this stuff? Right, exactly. And if you're, so now you're not a little local business in Missoula, Montana. Now you're, Apple. And believe me, you are keeping a pretty close eye on which product lines are making you money, which product lines are breaking even, and which product lines are costing you money. And you are constantly, and as we all know in this high-tech world, the product development cycles are shortening and shortening and shortening and shortening. So you better have a grasp on things today if you want to stay competitive, right? So now let's move into this different categorization of costs. This next categorization, and I think I'll just start by doing a big overview here too. We're going to be looking at the difference between variable, fixed, and mixed costs. So this is another categorization. We just finished product versus period, or manufacturing versus non-manufacturing. Now we're looking at a whole different categorization of variable costs, fixed costs, and mixed costs. Okay, let me just define those, and then we'll go look at the pretty PowerPoint pictures on them. A variable cost is a cost that remains the same per unit. but of course changes depending upon the volume. So can you give me an example based on what we've talked about so far on my yurt, an example of a variable cost that's going to,
Screws?
yeah. Indirect materials are a variable cost.
Wouldn't direct materials also?
Direct materials are clearly. I mean, each of those solar fans,
Wouldn't some indirect though, like quality control, for example?
possibly. The thing that gets tricky with indirect labor is that oftentimes they multitask. So I'm the supervisor of the yurt factory, but I might also do some selling. I might also jump in on the assembly line. We'll learn, once we dig into this a little bit more, we'll learn more about that. But for now, let's kind of leave that to the side. Those are kind of the biggies: direct material, direct labor, indirect materials. Some of our overhead's variable. How about some of our overhead is definitely variable. So variable manufacturing overhead. Okay, let's talk about that. This whole factory's off from, Wyoming and Catlin or something, some little backwoods cross streets behind, the bowling alley and the bar. What would be an example, and it's in an old kind of industrial type building, what would be an example of something that would be a manufacturing overhead cost that's variable based upon the number of yurts they make?
What is that question?
Sure. So there's this old steel industrial building that they actually, are making the yurts in. What would be an example of a component of overhead that changes based upon how many yurts they produce?
On electricity.
Absolutely. Absolutely. Great example. I mean, the more of those poles they're shaving and scaling and da-da-da-da-da, the more their saws are working, their blades are working. And that's a really interesting example because that's actually your power bill is probably a mixed cost. And I'm going to just go ahead and use this opportunity. A mixed cost is a cost that has a fixed and a variable component. So for example, your Northwest Energy bill, first you got to put part of it in the little sales office. 10% of it goes to the little sales office, 90% of it goes to the big metal building that they produce the yurts in. But then once you look at that 90%, a part of it's just like we charge you, totally making this up, $170 a month just to have a line in here. And then we charge per kilowatt hour. So there's a portion that's fixed and a portion that's variable. So let's jump down here then. And based upon what I just told you, can somebody other than me define what a fixed cost is?
Something that stays the
The same regardless of volume. What are some examples of fixed costs? So let's say they own their building.
So their rent.
They're not paying rent because they own it. Huh? Absolutely.
Well, wouldn't things like that almost be a mixed cost because after so much volume, you would have to have basically.
Of course you would think of that, Sammy.
I'm sorry.
Those are called step fixed costs, and that's a very important concept, in fact. Oh, all of a sudden this is tough to use. Oh, no, that's not what I wanted to do. This just needs to go down. Fixed costs, so this is money and this is volume, like number of units. What do you think a fixed cost line would look like? Starting where?
Somewhere.
Yeah, or whatever, my property tax bill on that building, $2,834 a year, right? That's a fixed cost line. But what Sammy's saying is like, so all of a sudden this thing just goes crazy. I think he said last year that they sold 38 yurts. All of a sudden, and this actually is being used. Most of my family lives in South Texas, and they're doing this to house their homeless populations. They're building tiny houses, and they're building like desert yurts. Super low cost, super safe, super efficient from an energy and water standpoint, and they're getting their homeless folks off the streets and into communities where they bring the services to them. So they've got AA there, they've got health care there, they've got all the things that you need to serve a homeless population, all concentrated. So let's say that my buddy down in Wyoming, all of a sudden he taps into that and he's got 380 yurts he's got to make. Well, his property taxes aren't going to stay here anymore, is it? Because he's going to have to buy or build or rent another building. So really, all fixed costs are actually look like this at some level. $2,834 till you run out of space, and this is called your relevant range. So my fixed costs are $2,834 for property taxes within my relevant range. In other words, I can manufacture up to 96 yurts per year in there. And I get this giant order for 300 yurts down in San Antonio. I've got to rent another building or buy another building, and now my property taxes are $5,700. And then I get another order, right, and you can see where I'm going with that. So all fixed costs are in nature step fixed costs. And this idea of relevant range is very appropriate. Whatever I forget to teach, you're going to prompt me.
Sorry.
Great. Okay, so what else besides property taxes? What do you got to pay? Pretty much stays static if you own a piece of property.
Like lawn maintenance.
Maintenance, yeah, for sure maintenance. That actually is usually a mixed cost because you've got a certain amount that's standard or fixed every year, but then it's like the more wear and tear, the more maintenance.
What about building insurance?
Yeah, insurance is usually in here. A portion of like your electricity, your water, your sewer, your phone, if you still have a landline, those kinds of things, usually you have like a cost just per year just to have access to it. And then, per gallon of wastewater, and per kilowatt hour, and, right? So those are usually mixed costs. Lots of utilities are mixed costs.
What about salaried workers?
So, give me an example, what kind of salaried worker?
Like say somebody makes $100,000 a year, and that's fixed yearly cost.
And what do they do?
Say they're like the director of the program.
So, their operations or their admin?
Well, let's do admin.
Okay, if they're admin, it's a period cost. It goes straight to your P&L.
Okay.
And that is a fixed cost, clearly. That's a fixed. Now, okay, what you're asking me to do, which is great, is pull together these two sets of concepts. It's the example of our $100,000 director of admin is a, what, manufacturing or non-manufacturing? Non-manufacturing. Is that period or product? period, fixed or variable? Right. So I've got a small rural hospital, I've got a director of admin up in Sanders County. She is a non-manufacturing, period, fixed cost, her salary. Oh, wow. Yeah, but realizing, of course, that period and non-manufacturing are the same thing. Okay, so that's what we know about that so far. Okay, what time do I have now?
47.
Okay, so I've got 3 minutes to wrap up and tell you what's going on for Thursday. Or, no, when do I see you again? Friday? Okay, and let's see, let me put on my glasses, see how far we are here. So, oh, okay, we almost made it through most of the content. Okay, that's great. So for Friday, please just read the chapter. And I think, let me just see.
Chapter 2 or
Chapter 2. No, chapter 2. And then let me just see, maybe I'll have you do a few of these little classification exercises, 2.2 and 2.4. Let me just have a quick peek. Yeah, perfect. Why don't you just do exercises 2-2 and 2-3 on page 54.